ready, Steve? Uh-huh. Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Tuesday, 9th day of March, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the charts or the screen I have up, go to our homepage at cfrn.net. On the right hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of your office, away from your desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live real-time simulcast of the show as it unfolds. You just want to have access to the chat box. Now, the chat box is important because you can ask questions and participate in the discussion. Okay? During this broadcast, we stream live on our YouTube channel, youtube.com/CFRN. youtube.com/CFRN. Now, if you happen to be listening to this broadcast after the fact, perhaps as a podcast on iTunes or Spotify or iHeartRadio, if you want to be able to see the charts that we're talking about, then you can hit pause on your podcast player, point your browser to our YouTube channel, youtube.com/CFRN. While you're there, hit the subscribe button so that you'll be notified every time we go live. Okay? And we do archive every show there, so if you miss a show, you can go back later in the afternoon, and we have over 1,600 daily shows archived at youtube.com/CFRN. So, with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace. God, we thank you for everyone who has gathered today for this broadcast. Thank you that you know each of us by name and have caused us to walk with you. We say that we are dependent on you, and our trust is in you completely, because it is. As we surrender ourselves, we ask that you would come by the power of the Holy Spirit and inspire our hearts today, our thoughts, our ideas, our words, our actions. We pray, God, that you would fill our lives with your love, fill our conversations with your grace and truth, and that you would fill this broadcast today with your presence. We ask this in the name of Jesus. Amen. All right. Happy Tuesday. Hope it's a happy Tuesday wherever you are. Let me bring in some fresh data here, and I'm going to give you the numbers from around the world. These are the cash markets, the indices as they're called. After I do that, Michael will pop in and give you a recap of what happened this morning in the live trading room, about 15-20 minutes. Then I'll come back and we'll go over all of the alerts for the last 24 hours. Concierge, the logic, and until I got the recap just now, I didn't realize. And Valerie's, she's real good with math. Now, the channel opens for business Sunday night at 6 p.m. Eastern when the Globex markets open. It's only Tuesday morning. We already issued 63 alerts. 13 never triggered. Still waiting on the outcome of 5. We've had 45 actionable alerts, okay, of which 7 stopped out. That's 16% of the actionable. Typically, on any given week, it'll be 20% of the actionable stop out. Based on not risking more than $300 per contract per trade, less when possible, based on market structure, and a simple 3-step method that we teach all of our traders. Okay, I'll go over these individual alerts with you when I come back, but let me give you these numbers from around the world. The Dow is up 291 points. The NASDAQ came from behind to be up 455 points. S&P 500 is up 74. Russell 2000 is up 50. For the Dow, that's a 1% gain. For the NASDAQ, it's a 3.5% gain. For the S&P 500, it's a 2% gain. And for the Russell 2000, it's 2.25% gain. All right, in the commodity basket, crude oil down 65 cents, trading 64.40 last. When crude moves $1 from, say, $64 to $65, if you're holding a futures contract, that's worth $1,000. Whichever side of the trade you're on, it has a value. A $1 move has a value of $1,000 bucks. Okay, and right now crude is down 1%. Now it's 71%, set down 71 cents on the day. Gold, on the other hand, is up $35.50. Way to go, gold. It's been a while. Trading 1713.50 last, gain of a little over 2%. Silver, hi ho, up 75 cents, trading 26.02 last. That's a gain of almost 3%. Now, if you're not familiar with silver, if you're holding a 1-ounce silver coin and the price goes from $25 to $26, you made a buck. On the other hand, if you have a large futures contract on silver, and silver goes from $25 to $26, that's worth $5,000. $5,000 per contract traded. Silver's volatile, margins are high, be careful. Okay. Now, I actually did an alert last night by request on corn, wheat, soybeans. I've got wheat right here in front of me. It's up a little over, it's up $8.75. I'm going to have to double check that. That's a gain of over 1%. Anyway, in the Asian markets at the close, Nikkei posted a gain of 284 points, almost 1%. Shanghai dropped 62. That's almost 2%. The Hang Seng rose 232, gain of almost 1%. And in the European markets at the close, FTSE up 11, the DAX up 57, the CAC up 22. That gives us a mixed day in Asia, a green day in the UK. And so far, it's a big green radio Tuesday here in the US of A. So with that, we will go to Michael and get that recap. If you're ready, Michael. If not, I'll pull up a daily chart of the S&P.
I am ready.
You are. Very good.
I am.
So you're saying the area that you're in doesn't have the 5G? Because
they have it in Charlotte, but they don't have it here.
I'm waiting for the other shoe to drop, because everything I've read is so positive. And, I mean, you can get speeds up to like 600 megabits per second. I'm paying
that's crazy.
pretty sizable money for 200 megabits per second. And you were on the show yesterday when I brought up that thing, right? When I showed it.
Yep.
Yeah.
Yep.
I got to look into that. There's a somewhere in there because it just seems too good to be. Why would Elon need to bother putting all those satellites in space well, I guess not every place has 5G. So, okay. Anyway, it's all yours. I'll hit mute and I'll be here when you're done.
Okay. All right. Here we go. Here we go. You should be looking at my screens. Yes, you are. Okay. Let me bring this up, and this up. There we go. All right. Good afternoon, everyone. Today is Tuesday, the 9th day of March, 2021. If you have not taken a free trial with us and you want to, go to the homepage at cfrn.net. Scroll down right here where it says free 5-day trial, no credit card required. Click on that, and you'll be brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. And hit the send button. Once you hit that send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay. If you don't click that confirmation link, we don't know that you hit the free trial button. Okay. You have to click that link. Now the results today was kind of a difficult day trading. I kind of thought it was going to be the way it started out, but anyway, let's get into the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 9th day of March, 2021. Today, we made 19 ticks in crude, 13 ticks in gold, and 12 ticks on the ES. Put us at plus 450 per session today, again, per 2-hour session, per contract, per 2-hour session. Today, it took 16 minutes and 4 trades to get to the goal for the day. At that point, we're up $290 a contract, and we took a total of 19 trades. So on the month now, we're up $8,442. That's over 7 trading days, averaging $1,206 per contract per 2-hour trading day. We've now gone 44 out of 45 days this year, getting our goal. And on the year now, we're at $39,927. That's over 45 trading days, averaging $887 per contract per 2-hour trading day. Okay, just want to make sure that filled in correctly. All right, so we didn't have a ton of trades today compared to most days. The markets were flipping back and forth across the BBC quite a bit this morning, and so that made it a little more complicated for trading. Our first trade here on gold was a break even. Our next trade here on gold, we picked up a couple of ticks. On this one, we took 7. I thought we only needed 7 to get the goal, so I took 7, but I should have taken 8. We could have gotten the goal right there, but we didn't. At that point, we're up 9 ticks. We missed a trade here, and right here we picked up another 5 ticks to put us at plus 14. You see how it was just going back and forth across the BBC? It was really complicated to trade that stuff. Here we picked up a couple more ticks to put us at plus 16. Then 5 more ticks over here to put us at plus 21. And then we stopped out to put us down at plus 13. And that was where we entered the morning session, really, as far as gains go. We missed a trade here. That would have been profitable. We missed a trade here. That would have been profitable. We took a break even there. We missed one there. That would have been break even. Missed one there. That would have been break even. And then it got really choppy getting into here. Okay. Crude oil. Now, who knew crude would be our big winner today? I didn't. All right, our first trade on crude was right here. It was a break even. Our next trade was also a break even. Crude was doing everything that I thought it would do. It got down to here eventually. It got down to here eventually. This was the level I thought it was going to get down to on this leg down, but it didn't quite make it there. It came all the way back up, and then it stopped me out right here. So we're minus 8 ticks there. Then we picked up 4 here to put us at minus 4. Then we picked up 8 to put us at plus 4. And 1 to put us at plus 5. And then here we picked up 10 to put us at plus 15. Then 2 more to put us at plus 17. Then a break even right there. Then we got into the end of the session, and I was really thinking it was going to get down to 64 here, and it did. right over here. It go down to 64. Now I set it way back here though, so I ended up with a break even on it. But yeah, it was way back here when I said at the end of the morning session, right in here, when I took a short thinking it was going to get down to 64. And it did get down there, but not without taking me out of break even first. Now it didn't count toward the room because I set it after the room. Let's see, where else? There was something else I was looking for. Anyway, during the break, we didn't have anything in there. We did have a long trade right in here. Nope, we didn't. I'm sorry, I take that back. We really didn't have much during the break. One shorting opportunity right here. It's pretty much all there was during the break. Right now, the ES, you can see what the ES was like. You see this right here. So it didn't give us a lot of opportunity. When it did, though, it was usually pretty good when it did. Let's go all the way back to the beginning. All this mess here. All right. So it started off with a big run here, right in the pre-market. Then it whipped right back down across the BBC, right back up, right back down. So you can't trade any of that. That misses the slingshot up. It leaves the cycle going up and down in the middle, usually like this right here. And so we had no trade setups in there. Then finally it started to break out here. It gave one long right here that would have been a break even had I gotten it, but I didn't. And sorry, it followed up with another long right here that we did get into. And sorry, I just hit my microphone sideways. And we picked up 4 ticks on that, 4 points on that to put us at plus 16. Okay. Then we didn't get anything in here. We were waiting and waiting. And when you see these like railroad tracks, the dynamic resistance and support dots like this, that's a very slow grind up with a slow, limited range grind up. Okay, so we got up into the high of the day, which is right up here. I don't know why they're not actually trying. Let me go to a 5-minute for a second. Yeah. Okay, so that's it right there. We got up to the high of the day, which is right there. Hang on. And the weekly trading zone. And it chopped around in the weekly trading zone for a little bit. We had an opportunity here. We got a couple more ticks there to put us at plus 18. Then 4 more ticks in here to put us at plus, no, 2 more ticks in there to put us at plus 20. Then we stopped out, put us back down to plus 12. And we just did not get any other good opportunities the rest of the afternoon. I mean, look at this garbage. I was worried it was going to be like that as it kept approaching the high of the day and the new highs of the day. And then on the larger time frame stuff, Dwayne's going to get into now. Down to 64.09. Good, Greg. The larger time frame stuff that Dwayne's going to get into now, you're going to see that this should go up a little bit higher here, probably another 6 points. And and we'll see again when it gets up there what it's going to be like. But on the larger time frame stuff, we're at kind of a spot where a lot of things are coming into play, retracements and BBCs and stuff like that. Dwayne's going to get into all that stuff in just a few minutes. All right, so back to the spreadsheet. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 9th day of March, 2021. Made 17 ticks in crude, 13 ticks in gold, and 12 ticks on the ES. That is right. Yeah, sure. And 12 ticks on the ES. That put us at plus 450 per contract on the morning session. Today, we took 16 minutes and 4 trades to get to the goal for the day. At that point, we're up $290 a contract, and we took a total of 19 trades. So you see it took 15 trades to get to 450 from 290. That speaks a lot to getting the goal for the day and putting the mouse away. But all these other times where we got to the 1510 from 100. Anyway, on the month now, we're up $8,442 a contract. That's over 7 trading days, averaging $1,206 per contract per trading day. Now let me just count that, make sure it's right. 2, 3, 4. That is right. Okay. We have now gone 44 out of 45 days this year of getting the goal. And on the year now, we're $39,927. That's over 45 trading days, averaging $887 per contract per 2-hour trading day. Okay. Let's see. Bitcoin, for those of you guys who are looking at Bitcoin and stuff like that. Bitcoin was hitting some nice numbers today. If you look at it right now, see Bitcoin is at 54,050 bucks, just at the 1 trillion market cap mark. And if you look at it over here, you can see right in here on the day it was up as high as 54,804 on the day. And if you look at the week, that is pretty much the same number on the weekly high. So we'll see if it can hold these numbers, or if it's going to retrace back down to the 50,000 level. Okay. Today it took 16 minutes and 4 trades to get to $290 per contract.
Good job.
Thank you.
Now, every day, guys, for 2 hours. Not for a month. Not for... When you become a passport holder, it's unlimited lifetime membership. So access to everything we do, everything we've ever done, and anything we might do. Okay? But don't expect any changes, because if it's not broke, don't fix it. But every day for 2 hours, you get a live instructor teaching you our strategy and answering your questions. Now, around the clock, we have an alert service that is constantly feeding you windows of opportunity so that you can practice what Michael teaches you. And the more times you hear that alarm sound on your phone, tablet, or PC, the telegram sound, dee-dee-dee, you go to your computer, you look at the alert, you look at the chart, you start to see that window of opportunity that the alert represents. You trade it in your simulator, and you keep repeating that process and repeating that process. Pretty soon you start to see the windows of opportunity yourself, before I even have a chance to point it out. Our goal is to get you to a point where you no longer need us. Now, we hope you'll stick around, because we have a great big vibrant family/community here. And one way of paying it forward is when the new guy comes along, who was maybe you 6 months ago, didn't know a candlestick from a fib, you, in the discussion group, which is open 24/7, 365, you get to meet and greet, answer questions, help the next guy to come along. And we just keep paying it forward and paying it forward. That's how our global village has been growing since 2005, and it's really been growing on steroids here in the last few years. I said before, we haven't changed anything in 8 years. We did add something 137 weeks ago, and that was our Logic 247 around the clock alerts. And so far this week, 63 total alerts, and it's only Tuesday morning. That might be some kind of record. 13 never triggered, waiting on 5, 45 actionable, 7 stopped out. Now, in the room, Michael teaches you to always use a hard stop, and to keep it simple, you use an 8-tick hard stop on everything on that fast time frame, the range chart. We use a fast chart in the morning so that you can see 5, 10, 15, 20 trade setups in the course of the 2 hours. If we did the live training room on a 30-minute chart, you might see 1 or 2 trade setups a day. And because it's the same thing over and over and over, we want you to see it over and over and over. Now, with the alerts, because we are embracing bigger targets, we use more risk, but our risk on the alerts is 300 max, less when possible, based on market structure and a simple 3-step method that we teach all of our traders. So based on that, so far this week, 16% stopped out. An average week will see about 20% stop out. Now, where do I have that? I know I've got it here somewhere. I really do. Last week. Why is last week hiding from me? I'm going to track it down. Maybe it's over here. Scrolling.
It's because I didn't put it in the same place as I usually do.
Tell me where to find it, please.
Let me send it.
I think I found it. Week 135, 96 total alerts. Here you go, guys. Last week, week 135, 96 total alerts issued. 16 never triggered. 80 actionable. 9 stopped out. That's 11%. Now that's for the whole week, but that's not a typical week. A typical week will be 20%. With our methodology and our strategy, we're going to teach you how to know what the next high probability move is on every market and on every time frame. I know that sounds like a tall order, but we don't ask you to believe us. We don't say, hey, look at what happened. If you'd have done this, you could have done this. No. We make no promises, and we don't ask you to believe anything we say. What we do is we give you a 5-day trial, and we actually do everything right in front of you. So you get to see it all happen live in real time, both in the room and around the clock with the alerts for an entire week. So on our website, you won't find any of those crazy, outlandish promises, that clever ad copy that has led you to spend $10, $20, $30, $50,000 perhaps on trading stuff, from gurus to rooms to indicators to tip sheets. Oh my gosh. So we take a completely different approach. We're very transparent. Everything we do right in front of you. There's no sleight of hand, no parlor tricks. The alerts come out well in advance of triggering, so that you have time to go to your computer, study the alert, study the chart, get out your simulator, trade it. You must stay in the simulator until you put together 10 consecutive days in a row, or you're just going to blow up another account. Once you have those 10 consecutive days, our blueprint will give you the green light to trade 1 contract live. Your goal is to increase your account balance by $2,000 so that you can add a second contract with the profits you earn trading 1 contract. The blueprint tells you when it's time for number 3, number 4, number 5. Now, as you saw in the room this morning, 2 points in the S&P makes you $100 per contract traded. 10 ticks in crude or 10 ticks in gold, that makes you $100 per contract traded. But once you get approved to trade 2 by the blueprint, and you're adding the second contract with profits you earned trading 1 contract, it's not out of your pocket this time, it's out of your profits. The same 2 points that made you $100 a week ago now makes you $200. The same 2 points. And by the time you've earned the right to trade 5 contracts, that's $500. And by the time you've earned the right to trade 10 contracts, the same 2 points that used to make you $100 a day now make you $1,000 a day. Sounds pretty simple, huh? Well, it can be. Trading's not easy, but it can be simple. Now, let's just be upfront about it. 9 out of 10 new traders fail. So if I'm trying to get you to sign up for our service, right? If I'm the pitch man, why would I even drag out this horrible statistic? published by Futures Magazine. Well, I'm going to tell you why. Because these numbers don't apply inside of our walls. See, these people, the 9 out of 10 that fail, they don't have a teacher. I mean, they might have a guru, they might have some videos, but you can't learn how to trade watching videos. That dog won't hunt. 9 out of 10 traders don't have a teacher to teach them how to do it. Just like if you want to be a plumber, doctor, brain surgeon, you know you got to find somebody to teach you how. 9 out of 10 new traders don't have a teacher, they don't have a business plan, and they don't have a trading plan. So if 9 out of 10 traders don't have a teacher, a business plan, or a trading plan, is it any wonder that 9 out of 10 new traders fail? Now, if you can track down the 1 out of 10 who actually succeeded based on the statistics from Futures Magazine, if you track that one guy down, that 1 out of 10, you would want to ask him one question. Hey, when you started, did somebody show you how to do this? 9 times out of 10, the answer is going to be, yeah, of course. How else would I learn? That's just how their mind works. So if you've already been down the rabbit hole, and you've been to a bunch of rooms and tried a whole bunch of stuff, spent a lot of money, time and treasure, okay, that can all stop right now if you want it to, okay? Because we provide everything a trader needs. One price, $5 grand. That's it. Exact price, $49.97. That's unlimited lifetime access to everything we do. It's the room every day, unlimited one-on-one mentoring. That doesn't mean you email back and forth with some trading coach. No. No, we meet with you live in real time in a go-to meeting environment where you can see our charts. We can see your charts if you want us to. That's how we mentor. Unlimited one-on-one mentoring. We teach you our methodology, our strategy. You own our indicators for life. And you get the alerts round the clock. Now in the beginning, it's an alert. It's alerting you to a window of opportunity in the market. And then you go look, check it out, trade it. Okay? But there'll come a day when your phone makes the telegram sound and you don't even have to pick the phone up. You know that it's an alert on the S&P to enter at this number with an initial target here and a final trade to target here. You learn how to find these windows of opportunity yourself. Okay? So again, we make no crazy promises. We don't ask you to just believe us. We spend 5 days treating you just like a member, showing you what we do, how we do it, right out in the open with everybody watching, so that at the end of 5 days you can make a well-informed, intelligent decision if you're ready to actually, learn how to trade, or do you want to keep spending money at these places that keep just lying to you. That's the bottom line. People lie. Okay? On behalf of the industry, let me apologize for those folks. All right. So we saw last week, I showed you a recap of this week. Let me just do this again real quick. Last week we had 96 total alerts. Now, this week it's only Tuesday. I'm not even sure how this happened, but it did. We have 63 alerts already. 13 never triggered. Still waiting on 5. 45 actionable. So far, 7 stopped out. 16%. Typical weeks 20. Now, these alerts you speak of, sir. What's that all about? Well, let me show you. Just scroll back to the beginning of the week. Scrolling. A lot of alerts to scroll through. Here we go. Okay. We are in week 136 of Logic 247. Why is it called that? Because every alert is logical. It's based on logic. No mystery, no secret, we explain to you why the next thing that is about to happen in the market is logical. Now, 20% of the time, the market does something other than the next logical thing. Okay? That's why on an average week, 20% gets stopped out. So we call it logic. And from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern, 24/7. Not actually 7, but I tried 24, 5.5, and it just didn't have the same ring. So, coming out of the gate Sunday night, we had a long alert on the S&P that never triggered. It's alert number 6,749. When you see the Z's, that means it just didn't trigger. The price never got up to 38.72 to trigger you in. Same on the Dow, same on the Russell, same on the NQ. Crude oil got stopped out. Remember, it's an 8-tick hard stop in the room while you're being trained. With the alerts, we don't want to risk more than $300 per contract per trade, but less when possible, based on market structure and our very simple 3-step method that we teach you. Here is a short on gold, GGCJ21, okay? S is sell, up here B is buy, T is initial target. Now on a long, okay, those got turned around. On a long trade, the final trade to target will be the weekly trading zone overhead. On a short trade, the final trade to target will be the weekly trading zone below. So this was to sell 1693, initial target 1692. The initial target is designed to provide you with that daily goal of $100 per contract per trade, if that's what your daily goal is. Okay. And then PS means potential support. Remember, we shorted the market, we sold. There's $100. There's $200. Potential support. Market could turn here. If it keeps going, we expect it to get down to 1679/1680. That's the weekly zone below. Now, we gapped higher on the open Sunday night. Futures don't gap a lot because they're open around the clock. But on Sunday nights, the markets have been closed for a day and a half, so there's some pent-up energy. The index futures, when those things gap on Sunday night, the percentage of times that they close within the first couple of hours, or at least during the first session of the week, is astronomical. We had an S&P gap fill. Thumbs up means it did the deal. Dow gap fill. Russell gap fill. NQ gap fill. And a crude oil gap fill. Another no trigger. Now so far everything I've showed you has been from Sunday night. Most traders are waiting on Monday morning, 9:30 a.m. Eastern. We start Sunday night, 6 p.m. Eastern. There's a long on the S&P. Okay. Now what happened is the S&P did a retracement. Up here, up above, we had a long S&P trade. But then price did a little retracement before it triggered. So it gave us a better entry point at 38.37, up to 38.39, up to this zone at 46.47, and then the trade up above kicked in and took you the rest of the way. This is a long on the Dow, initial target, second target, final target, previous alert still valid. Long on the Russell, long on the NQ, short on the S&P. Now hedge, what does that mean? Okay, the market will sometimes get into a position where it could break to the upside, it could break to the downside, based on our strategy, our indicators, and where the weekly zones are. So in this instance, we already had a long on the S&P up above, but before it triggered, price started to drop. So we're not going to be stuck in our ways. We're not going to, no, it has to go up. If it chooses to go down instead of go up, we don't care which way it goes. As a futures trader, price simply needs to move up or down. Price can only do three things: go up, go down, go sideways. Okay? And so a shorting opportunity presented itself. So there's an open long up here. Hasn't triggered. Now there's a shorting opportunity. Okay. Sell 38.13, initial target 38.11. Second target 38.08. Next target 37.89. The final trade to target, weekly trading zone below. Okay. Now when Valerie comes through and does the recap, she notes for me what the current swing high or swing low was at the time of the recap. This doesn't mean that's as far as this went. It's just a reference point for me to know when she did the recap. Okay. Hedge on the Dow, hedge on the Russell, hedge on the NQ, long on crude oil, short on gold, short on silver, hedge on silver that never triggered. Now, see here where it says March 8th? That's Monday. Everything I just showed you was Sunday night. We did all of that Sunday night before Wall Street even woke up. And then on Monday, we had to stop out on the NQ. No trigger, no trigger. Short on crude oil. Short on gold. Long on the S&P. Long on the Dow. Long on the Russell. Long on the NQ. We're going to go to the charts and look at these here in a minute. Short on gold. Short on crude oil. Stop out on the S&P. Long on the Dow. Long on the Russell. No trigger on the NQ. Stop out on the S&P. A hedge long on the S&P. Long on the Dow. Long on the Russell. Stop out on the NQ. Short on crude. No trigger on gold. Still waiting. Still waiting. Long on gold. Stop out on corn. Somebody mentioned the ag markets last night, and it's been so long. We used to own the website soybeandaytrader.com, but I couldn't keep up with it. Anyway, soybeans are a good market if you never looked at them. So stop out on corn. No trigger on wheat, short. And then I came back with this was a short on soybeans, short on crude oil. And then that brings us to today, Tuesday. Stop out on the S&P, long on the Russell, long on the NQ, no trigger on crude, long on gold, hedge on wheat, long on the S&P, long on the Russell, still waiting, still waiting. So you just saw every one of the alerts so far this week that was in this recap right here. Okay, this really helps put it in context. 63 alerts, 13 never triggered, waiting on 5, 45 actionable, 7 stopped out based on this risk profile, 16%. Okay, all right. So you've seen the recap, you've seen the alerts. Let's go look at some charts. Now, we have another type of alert that doesn't come out around the clock. It comes out once per session, shortly after Globex opens, and I'll show you that in a minute. Okay. Now I took the charts for a few minutes this morning in the live training room. This trend line connects the all-time historic intraday high to the high of February 25th. And buyers are driving us, and we've got an intersection. This trend line intersects with the 38% Fibonacci price extension, which we bounced off that thing and bounced off that thing, and then it was resistance, and then it was resistance. And so we have two reasons, actually 3 reasons, why we may find good resistance right here. Number 1 is the trend line. And this is in no specific order. Trend line's one reason, 38% fib extension, two reasons, and then this previous swing high at 39.12. So from 39.05, which is the green line and the trend line, up to this swing high at 39.12. I would call that a no-fly zone. Stay the heck out of there. It could get very, very, very choppy. If by some stroke price just, blasts through these areas, then from about 39.17 up to this high, we got a weekly zone at 39.30/31. So from about 39.17 to 39.30, that's a nice window of opportunity, and we'll look at it on the smaller time frame. I teach all of my traders to start their day. Doesn't matter what time you start your day, start it with the daily chart. Okay, identify where major support and resistance is, because you can't always see that on the smaller time frame. Okay, so I just identified such numbers: 39.05 up to 39.12, no fly zone, and then about 39.17, potentially long all the way up to 39.30. That means in order for that to happen, though, price here has to overcome three big obstacles: the green line, the high of this day, and this trend line. And of the three, that trend line just might be the toughest, because more people now, institutions, as retail traders, we look at a lot of smaller time frames, 5 minutes, 1 minute. Most of your institutional traders don't. They may look at hourly, 4 hour. And I'm not saying they never look at a 1 or 5 minute. I'm not saying that, but they make their decisions off of daily and weekly charts. So lots of fat pocket traders around the world understand, because see, there's nothing proprietary about this. Every trader can see this. On a daily chart of the S&P 500, all-time historic high intraday, President's Day, which was a bearish engulfing, and that's what led to this whole debacle, okay, connected to the high of this day, 39.34 half, and so we haven't touched it yet. So as we approach it and touch it, the question is, do we get a reversal? If so, you'll see green all the way up to the trend line, and then it'll back off and you'll just see wick. If we can get on the other side of it, on our smaller time frame, we'll look for a pullback to the top, to the other side of that trend line. And then once we get above that 39.12 area, up around 39.17, we'll start finding long trades. So look at the 30. Liken it to this. I won't use the sidewalk in front of your house. Today I'll use, let's do war today. Why not? I've been trying to learn sports metaphors for you guys, but I get them right sometimes. Okay, there's a battle raging. Okay, up on the hill, in one of those little tents, there's a couple of generals. They got their brandy, they got the cigars, and they got all these maps spread out on the table in front of them. They're trying to decide where they need to deploy their troops next. There's no bullets zinging around their head, because they're the generals with the brandy and the cigar, right? And they're talking and grumbling and doing general stuff, right? Now, as we go down to the smaller time frame, which the next one I'm going to show you will be the 30 minutes. This is actually the soldiers down on the field. By the time you get down to a 5 minute or 1 minute, which you won't see me use that, we have a purpose for that, but it's not something that I go over publicly. It's what I teach in one-on-one mentoring sessions. But you're at the 30 minute, you're getting down to foot soldiers. And by the time you get down to a 5 or 1 minute, you're literally the guy in the foxhole. You're just jumping from foxhole to foxhole to foxhole. Okay? All right, so that's my war analogy. Now we go to work. 30-minute S&P 500 E-mini futures. Okay. Now I got a lot of yellow lines. Those are previous weekly zones. Currently this week we have a zone at 3806/07, 3880/81, 3930/31. Okay. Now 3892, that was the second to the highest weekly zone last week. And we talked about this morning when I took the charts for a bit in the room. This number here, who remembers where that was, why it was important? From the fibs of the last leg up, from this low to this high, your 24% fib. Price spent a lot of time this morning. How much time? This much time. That little black line represents that 24% fib from the daily chart. So this 30-minute candle couldn't do it, couldn't do it, did it, and then immediately pulled back and hit the weekly zone from last week. But buyers didn't give up. They kept pressing. And so then they got us above 38.92. And now we have an old zone at 06. We got some potential resistance up around that number I just gave you, 39.17, right? I want to get above 17 and then trade the move into the zone at 30/31. Price is always trying to get to a weekly trading zone. I'm not talking about the yellow lines in this case. I'm really talking about the gray lines, the current weekly zones. From the moment the market's open, price is trying to get to a zone till they close Friday afternoon. If price is above the BBC, this green line, then that means price is trying to get to the zone overhead. When price is below the BBC, the green line, price is trying to get to the zone below. And then once price gets back above, the zone above, zone above, zone above. Get the idea? So you can know with certainty. Now, this doesn't mean you know what's going to happen next, because nobody does. It's in Genesis, right? But by simply looking at a chart, you can know what the market's trying to do. Okay? Again, if price is above the BBC, it's trying to get to the zone overhead. Once it gets to that zone, it's going to try to get through it. In this case, it did. Okay. Now, we had a bullish cross here. You heard Michael talk about this in the room on the range chart. It's the same on this 30-minute chart. Bullish cross. Price pulls away. Price pulls back to physically touch. Up close. You could have got long on the open of this candle. 38.42. We're up at 38.92. That was 50 points. And you see how each pullback to the BBC held. The pullback holds more often than it doesn't. Okay? So again, no mystery, no magic, no secrets. I'm just teaching you how price flows. And it flows the same on a daily chart, as a 1-minute chart, as a monthly chart. Okay? We're printing a red candle. We know that price is trying to get to the weekly zone overhead, because that's how it works. We've published the zone since December 14th of 2009. If buyers are unable to take out this they just put an obstacle in their own path, because they stopped buying at 38.99.75. How do I know they stopped buying there? Because that's the high. If someone had been willing to pay one more tick, the high was 38.99. One more tick would have been 3,900. But not an institution, not a retail trader, not nobody, not nowhere, not know how, for whatever reason, and they all got different reasons, nobody was willing to pay that next tick. Buyers literally stop buying. When sellers, or hedge funds that like to focus on shorting, when they see that buyers have stopped buying, that's when they pounce. And they're going to drive this thing as hard as they can until buyers find a spot attractive, and they're going to come back in full force and start buying again. That's how you get these legs. See, leg, retrace, leg, retrace. Right here, nobody was willing to pay 38, 65, 75. If there had been, we would have ticked up to that price. There was orders in the DOM. Nobody was willing to pull the trigger there. So price retraces to the BBC. The pullback holds more often than it doesn't. See how we consolidate here? Off we go on the next leg. So we had a leg and a retracement, a leg and a retracement, a leg, and now we're getting a retracement. Okay? Now, price will find support either at the step line, blue and climbing. If we get below blue and climbing, then price will most likely find support at this weekly trading zone, 3880/81. We don't trade the counter trend. We have almost 7,000 alerts in the Logic Alert channel. Every one of them is a trend trade as defined by a 30-minute chart. This is an uptrend. Why? Because price is above the BBC. Leg, retrace, leg, retrace, leg. The only question is, how deep will this retracement be? Okay. Now, not all institutional traders look at a 30-minute chart. They all look at a daily chart. So the reaction to fibs drawn on a smaller time frame won't always be as dramatic as what you see on the daily. Okay. So if price pulls back to blue and climbing, it's called the CFMA1. I just refer to it as red and falling, bearish, blue and climbing, bullish. Okay. So right at the 24% fib, 24% fib of just the last leg up, lines up right here. From this low to this high, there's the 24. But you see, buyers just came back in at 38.92. Last week's second to the highest weekly zone. So buyers are now going to try to take out this high. So there's no action we would take right here. If price takes out 38.90, 975, I think I have an alert in the channel, then I'm interested. But remember, we've got 39.05 to 39.12. That's a no-fly zone. Doesn't mean price can't just slice through it. It can do whatever it wants. It's the market. And as you've noticed, the market's always right. So 39.05 to 39.12. No fly zone. We don't want to be in the market right there because there's just too many obstacles, too many reasons for sellers to get the upper hand. However, once we take out this, I might give you a window up to 39.05. See, 06 was a previous zone, but 39.05 is the 38% Fibonacci price extension, which has seen a lot of action. Okay, see how price, remember, that's where we're going to hit that trend line and that green line, 39.05. So I would really prefer to go find some market where I don't have all these conflicting things. We want it to be simple. The simple and the obvious, as Bert says. Bullish cross, price pulls away, price pulls back to physically touch, up close, go long. Price pulls back to the BBC, up close, go long. Going along here, based off what Michael teaches you in the morning. Okay, 38.54 up to 94. 40 points, $50 a point. $2,000 per contract traded. Now, some folks may just get their heads. Be real careful here, guys. I wouldn't even, if it flies through and you miss a trade, hey, at least you'll still be around to make another trade. I mean, if you're a trader and you know what you're doing, then you do what you do. But any of our people that are new, the reason I'm able to show you recaps like this is because I only publish in the channel what I believe is the highest probability, lowest risk trade setup that I can find. Okay. All right. So, the other alert that I was telling you about is the concierge trade alerts. These are published once per session, shortly after the Globex open. There's 2 numbers for each market. I published them last night at 7:15 p.m. Eastern. Instructions are simple. If price starts moving up to 38.55, that's bullish, and you want to use our strategy and logic to find opportunities to be long. Above 38.55, you only want to look for longs. If price starts drifting down to 38.27, that's bearish, so you start looking for short setups, and then once you hit 27 and below, you would only look for short trades. Okay, so last night, 38.55 was the line in the sand, and so you literally just go to your chart, draw that line. Important prices, important areas are almost always tested. You'll hear me say that a lot, mostly because it's true. So we had a CTA 38.55. Alright, so price comes up, triggers 38.55, takes us up to 38.63. That's an 8-point trade at $50 a point, $400 per contract traded. Then what happens? Price pulls back to blue and climbing, it gets below the trigger, and this time it goes from 38.55 to 38.65. That's 10 points, $50 a point, $500 per contract traded. Many days we see these alerts trigger 2, 3, 4, 5. Let me put it this way. Once an alert triggers, there's a greater probability of it triggering multiple times than not. Some days we see one alert trigger 3, 4, 5, 6, and more times. Okay? But again, you don't have to believe me that important prices and important areas are almost always tested, because I just taught it to you. Now you're going to start watching for it, and whether it's a month or a year from now, you're going to shake your head and go, doggone, he was right. Okay? I didn't create that. I'm just aware of it, and so I'm just sharing it with you. Okay? If you take nothing else away from your week's trial with us, or nothing away from this broadcast, just remember, if it's truly an important price, important area, it will get tested. Okay? So, we had $400 trade, $500 trade, and then we got back below the trigger, but not all triggers are created equal. See, over here, you had blue and climbing. That supports a long trade. There's one trade, back below the trigger, second trade, back below the trigger. Now, on this one, just as you start to move above the trigger, you got red and falling, which is often resistance. Okay? This time we did make it through it, but you have to anticipate that's going to be potential resistance. So while I would have been happy to take this long or this long, I might have been a little more hesitant on this one. But once price got above red and falling, and it became blue and climbing again, then we had logic alerts pretty much all the way up. The short side on logic last night was 38.27. And the alerts came out last night at 7:15 p.m. So that's 1900 hours. Okay. It was during the life of this candle. Those two lines in the sand I just drew, the one on the long side, the one on the short side, were published during this candle. Now the numbers are good for the entire session. Okay. The swing low right here was 38.26 and a quarter. So I could stretch that line all the way over. We went 3 ticks over the line. Okay. So now it's important to always look at the chart when you're, don't ever trade an alert just because it's an alert. Go look at the chart, because if you were looking at this chart, see this, price is coming down to the trigger, but red and falling is directly below it. And while yes, this is bearish, while this represents resistance, when it gets directly below price, it often becomes support, because that's telling you it's about to switch back to blue and climbing. Okay, like up here, right? Price put in these highs, started to walk sideways, turns into red and falling. Okay, now price tried to go higher, but it had resistance. See, over here, blue and climbing supports higher prices. But once blue and climbing gets above price, now it becomes resistance. Just like this represents short trade, shorting opportunity, more selling pressure than buying pressure. But once it loops around and gets below price, you would not take that short. Okay. All right. So I'll move quickly through the others because we trade every market exactly the same. S&P, Dow, Russell, NQ, you name it. Okay, the CTA number last night for the Dow was 32,000. 32,000. There's 32,000. Okay, and we got a swing high so far, 32,118. So call it 100 points at $5 a point, $500 per contract traded. Now I could easily see price dropping back below the trigger, finding support at the BBC, and another leg to the upside. Short side on the Dow last night. Now remember, the CTA, it's 2 numbers per market, good for the entire session based on historic price action. The logic alerts, the ones that come out around the clock, those are based on current price action. So the short side of the CTA was 31,660. And as we can see, that's not been touched. But it would not surprise me to see either price is going to find support at blue and climbing and make a run at this old zone, or it's going to drop, get below the trigger, find support, give us another leg to the upside, which should take us to at least this swing high. Okay, next is the Russell. Okay. Numbers for the Russell last night were to be long 22, 27 and above. So 22, 27. There's 22, 27. By 22, 27. Okay. Now, price took us up to an old weekly zone, last week, I guess. Let's see how we consolidated. Price starts to walk sideways. So from 22.27 up to this zone at 36, that's 6 Russell points, $50 a point, $300 per contract traded. Price then got back below the trigger, found support at the BBC. Now you got that same dilemma you had before. if you go long, you've got to anticipate this could be resistance. Doesn't mean you can't take this trade, because price just showed that it can go from 22.27 to 22.37. Okay, it's really a 10-point move, $500 per contract traded. It gets back below the trigger, does it again, and then look at this. It's almost like an obsessive compulsive thing. It reached down. Now think about it. This candle was a huge red candle. It got below the trigger, and then buyers came in, the cavalry, and turned that red candle into a green candle. Okay, and so this time from the trigger, 22.27 up to almost 67. So it's between 30 and 40 points. Let's call it 30 to be conservative. It's $1,500 per contract traded. And what's price trying to do? It's trying to get to the zone overhead. This week's zone, 2271/72. Zone here at 2224/2225. That's a current. The gray ones are current weekly zones. And then this was an old zone. I just never turned it yellow. Okay, 2197. This week, the next zone below is 2156/57. I'll get rid of this old zone. Okay. So, what's price trying to do? It's above the VBC. It overcame this zone, then it overcame this zone, and now it's trying to get to that zone. Price is always trying to get to a zone. So if price can take out this swing high, beautiful window of opportunity from 2266, be conservative, 2270. That's a 4-point move at $50 a point, $200 per contract traded. Now, the CTA number is way down here, okay, but you've already had multiple times to trade that. If you're looking for something to trade now, you got to let price take out this swing high, get along here, ride it up to the zone. The closer price gets to a zone, the greater the probability that it's going to actually get to the zone. Okay. All right. Next on my list is the NQ. NQ on a tear. Let's shrink this up and look at it for a minute. Oh, I can even do one better. I got a daily NQ going. I think I talked to you yesterday, guys, about a transition. We know we've been in a downtrend on the NQ. And so this is transitioning from a down leg to an up leg right here. Now, you're seeing this on a 30-minute chart. But the same type of behavior happens on a daily, on a 1 minute, on a monthly, okay? And this is where a lot of traders can get hurt financially and psychologically, because they keep thinking this is the one that's going to run. This is the one that's going to run. Okay, this has to be the one that's going to run. And it looks like it might be, but remember, we don't know the future. All we know is what the next high probability move is. Right now, the swing high is 12,837. Okay? So, how about 12,855 to 12,865? That's $200 up to 12,885. In fact, make sure that's the current weekly zone. I got to update my chart. That's an old weekly zone. We got a this week zone right where we are. We're right at a zone, 12,825. We're getting above it. 12,825/26. Okay. All right. So we're at a weekly zone. See what price did? It went from zone, zone, zone. Now the next zone overhead is 13 123. /123/124. All right, so I'm just going to clean all this up. It's only Tuesday, but my goodness, we got so many alerts already. So 123/24. That's a current zone. 12/8/25/26. That was a previous zone, but it was so important in this move. I'm gonna hang on to it for another day or two. I'm gonna turn it yellow. Okay, and then below that, this week's zone is actually at 12/5/19. 12/5/19/20. And then this zone, 12/3/08, should say 309. This is a current weekly zone, 12/3/09/10. So price goes from zone down to the zone, back up to the zone, down to the zone, back up to the zone, down to the zone, back up to the zone. See how that works? We've been publishing these since December 14th of 2009. If all I could have on my chart was my BBC and my weekly zones, I'd be a happy camper. Okay. You've noticed already what a bare bones approach we do. That's simple by design. Michael and I used to have every indicator, every oscillator in the world. We bought them all, sometimes twice. When there was nothing left to buy, we started rolling our own. But we realized that we were getting no closer. We're always one mouse click away from greatness. Finally, after much soul searching, we decided instead of more stuff, what do we got to lose? Let's try less stuff. Simple. Once you understand how price flows and what price's objective is, what it's trying to do, then you're not trying to outthink it, outbox it, outsmart it, outrun it. You're just trying to mirror it. We just want to do exactly what the market's trying to do. And that becomes simple when you're able to understand what the market's trying to do based on how price flows. If we can get above this zone and hold it on a little pullback, then we'll have a tradable opportunity up to this area around 12/9/20. Okay, but not yet, because when we approach a zone from below, we expect it to be good resistance until proven otherwise. Just like when we drop to a zone, we expect it to be good support until proven otherwise. Support, 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 support. We expect this to be resistance until proven otherwise. If this holds as good resistance, then we would look for a retracement back to that zone I left on from last week. And so by the time this stalls out and retraces, the BBC probably be right over here, price be right about here. And remember, the pullback holds more often than it doesn't. So numbers on the NQ last night, what did I say they were? 12/5/82 on the upside. 12/5/82. $12,582. That's close. So from 82, we made it up to 612. I gotta open this chart up. It's too hard to see. There we go. Now we can see it. Okay. So from 12,582, 92, 102. Is it 30 points? $20 a point, $600 per contract traded. Then we got back below the trigger, did it again. This time we've gone from 582 to 826. So 826 minus 582 is 244 points at $20 a point. That's what the NQ pays. From the trigger to where we are now, that's a $4,880 per contract move. If you've earned the right to trade 2 contracts, then it's it's almost a $9,000, it's almost a $10,000 move. 1 contract from here to here. Now we have what's called an exit signal. I'm not going to teach you that today. But the chart, on an extended move, the chart tells us when the move's over and it's time to get out. And the exit signal has not happened yet. If we stall here, could it? Yeah. And what will happen is price, it's been moving up pretty strong. It'll start to walk sideways. And this step line will go from the left side to the right side. Oh, it already has. But now it's trying to cross back. So, anyway, to all of you who took advantage of the NQCTA last night, that bell's for you. All right, next on my list, crude oil. Now, again, let me just reiterate, this is not a woulda, coulda, shoulda thing, okay? These alerts come out live in real time before they trigger. It's not, you could have got in here, you could have got out here. No, the alerts give you an entry price, an initial target, a second target, a third target, and then a final trade to target, okay? And again, they come to you via our messaging client long before they trigger, because I know you have to have time to finish what you're doing. Once you hear the alarm, get to your computer, get your headset on, whatever, put your glasses, gotta find your glasses, get your chart up, read the alert. Now again, I don't want you trading an alert just because it's an alert. I know that some people think they're clever, they just use the alerts to make money. Okay, well, they're shooting themselves in the foot because they're not putting in the work to learn how to find these windows of opportunity themselves. So they're going to be in a world of hurt when the day ever comes that we decide to stop publishing them. Michael and I aren't planning to retire anytime soon, but the whole purpose of what we do is to not just give you alerts that you can trade and make money. I know there's people, there's businesses out there, services, that's why they exist. Wow, that was a great trade. Tell me how you did it. No way, that's proprietary. Okay, well, we teach you our proprietary method. We want you to be able to find these windows of opportunity yourself, okay? We want you to stick around, be part of the family, help the new guy. But you will reach a point. Now, some people will never reach that point because they just trade the alerts and make the money. Okay. I can't make you do anything. It's your passport. Do with it as you will. But I hope you'll put it to good use. I hope you'll show up in class once you have your passport. Come to the workshops, book one-on-one mentoring sessions, and actually learn how to trade. Okay? Again, these aren't parlor tricks. This isn't sleight of hand. This is right out in the open, transparent as anybody could be. And we hope that you'll see that it's different. That's why for 5 days, we don't ask you to trust me or just believe me. No, watch me. Watch us. And then at the end of the week, and you know what? At the end of the week, sometimes there's certain personalities that would still rather go chase the pie in the sky than the real thing they just saw, because the other's more adventurous and more exciting and all that stuff. If you're looking for excitement, learn how to surf or skydive. This is a business. You don't go to work every day to get your adrenaline rush. You go to work every day to try to earn a living, right? Okay. The more you treat it like a business, the more it will behave like a business. You treat it like gambling. Those are the kind of results you get. So uncrewed, the long side was 66 bucks. Not unusual. Price marched right up to it and said, important price, important area. When price reaches a CTA, it literally has to make a decision. Are buyers committed enough to take us to the next area of resistance or not? In this case, it was not. The short side on crude was 64.40. And 64.40 is down here. 64.40, the swing low. 64.34. It went 60 bucks over the line and then raced all the way back to the next CTA, then turned around and raced all the way back to this CTA. This time on the second approach, the first trigger dropped from 64.40, so it dropped 25 points, $250 per contract traded. Got back above the trigger, did it again. This time it dropped from 64.40 down to 63.92, so almost 48 cents, right? $480 per contract traded. Okay, the only thing left on the list is gold and silver. And I think I see a question in the chat box. Dwayne, do you have your classes recorded so the students can review if they can't attend your classes? Benny will work with you. You talk to Valerie. It's the same thing every day over and over. So, I mean, I know the market does the same thing every day in a slightly different way. So, certainly we will set you up with some classes so that it won't interfere with your day job or whatever it is that you have going on during that time period. So call Valerie today, 949-42-EMINI, 949-423-6464. And she'll talk to you about that, okay? And she's really nice. You'll like her. We all do. I do. Okay. Look at this gold. You get a bullish cross. After this,
I'm going to jump in there and say thank you.
Oh, you're welcome. I got a bill for you.
And you'll talk to Benny. He's got a mentoring session with you this afternoon.
Oh, okay. I look forward to meeting you today, Benny. Okie doke. On gold, we have a current weekly zone at 1710/11. Okay. And then below that is 1695/96. That's this one. I'm just going to take out this old weekly zone. Now the next zone overhead is going to be 1719/20, which, did we hit it? Almost. Zones are an area, like fibs. Swing high was 1870, so we missed it by 3 ticks. So we went from zone to zone, 9 points, back to the zone, 9 points, and now trying to go back to the zone. 9, 18, almost 27. People always ask me, could I just trade zone to zone? You can. I got to teach you a few things, but it's certainly doable. Price is always trying to get to a zone. Well, how do I know which zone it's trying to get to? Well, when price is below the BBC, it's trying to get to this zone, and then this zone, and then this zone. But once price gets above the BBC, now it's trying to get to this zone, consolidates, and then wants to go to this zone, and then wants to go to that zone. Over and over again and again. First day we published the zones was December 14th of 2009. All right, last night's CTA for gold was 1690. Okay. Now on this one, we had a swing high, 1691.4. Okay. $140 per contract traded. Then we got back below the trigger, and from the entry at 1690, your trade to target would be the zone overhead, and that's 1695. Now I kept going, and because there's no exit signal present, you could stay with it. That's an exit signal right there. See how the step line, it's on the left side, then it goes to the right side, and then on a long you get a red candle that closes below the step line after it crosses over. That'd be your exit price right there, 1700.6. But your initial trade to target is the zone overhead. So the number 1690 to 1695 is $500 per contract trade. Last but not least, silver. We drew this head and shoulders yesterday, and I said I don't expect this to play out. I mean, we had the head, we had the shoulders, but I wasn't really looking for this neckline to break. But it was just so obvious, I wanted to show everybody what it looked like. It did take off to the upside, and last night's number for silver was to be long 25.64, which is right here. Now, when silver moves $1, like from 25.64 to 26.64, which is still up there a ways, a $1 move in silver has a value of $5,000. A 2-penny move is $100. And so again, the trigger on silver is 25.64. So the initial move up took us to 83. So almost 20 cents. If 2 pennies is $100, that's a $1,000 move. You look at that. A retracement to support at blue and climbing, another leg. Retracement to the step line, another leg. Retracement to blue and climbing, another leg, and another retracement coming. Okay. There you have it, around the world and however many trades that was. Now, again, this is how we roll. When you buy a passport, you get everything we've ever done, everything we do, and anything we will do in the future. It's a lifetime membership. There's no recurring monthly fee, annual fee, bazaar fee, no upsells. We don't have any other indicators to sell you. We don't have any other classes or courses to sell you. We got one thing. We don't want to muddy the water. We got one thing. It's $5,000. $49.97 to be exact, okay? But it includes everything you see for life. That includes the alerts. I probably don't have to tell you that when you're trying to learn a strategy to have someone actually, show you the trade, hey, from the entry here to this target to here, that looks like a pretty good opportunity. So you get to study that and then actually trade it in your simulator, in your demo account. And you just keep repeating that and repeating that and repeating that till pretty soon you start to see the windows of opportunity yourself. Because I'm telling you, you don't ever want to be dependent on another person or machine, okay, to tell you when to get in or get out of a market. Because people will fail you, machines will fail you. But once you understand how price flows, and that's what I'll teach you along with other things, then it's you in the market. You can work from anywhere in the world that you have a strong, fast internet connection. Laptop, a couple extra monitors, ready to go. Got a beach home somewhere, you can still work. Just want to travel, you can still work, okay? But it has to be a fast, reliable internet connection, because it doesn't matter what country. We have traders all over the world. Doesn't matter what country you're in. You could log into the room in the morning or to the afternoon broadcast. Our discussion group, okay, if you're on the trial and haven't tied into the discussion group, you're missing out. That thing's open 24/7, 365. We provide member support around the clock. If you ask a question at 2 a.m. in the morning, most likely you'll get an answer. And if you ask a question at 2 p.m. in the afternoon, you'll definitely get an answer to your question. You'll always get an answer, okay? You don't have to submit a support ticket. You can email us, you can call us. But the quickest way to get our attention is in Telegram. Just send us a message. I've got it on my phone, got it on my tablet, got it on my desktop, so I'm probably the most available guy in the world. Okay. All right. If you missed yesterday's good word for the day, something moved me last night to suggest that you might want to watch it. So if you do, just go to youtube.com/CFRN. And we archive every daily show there. We've been talking the last 3 days about being creative. So we'll stay with that. Day 4. Exodus 28:3. Speak to all who are gifted artisans. God told Moses, "You shall make holy garments for Aaron your brother, for glory and for beauty. So you shall speak to all who are gifted artisans, whom I have filled with the spirit of wisdom, that they may make Aaron's garments." Exodus 28:2-3. Now, note the word artisans. I know it's, today you get artisan bread, and all right, it's like a cool thing, hipster thing. I don't know. Not making fun of you if you're a hipster. I don't even really know how to define what a hipster is. I think you got to wear those low-cut pants or something. I don't know. Oh, and I think you got to drink Pabst Blue Ribbon. That's about all I know about that. Okay, so the word artisans is used. God gives us artistic ability. And when we use it, we glorify Him. Now, you might be going, dude, I can't draw a straight line, even with the trend line tool. I feel your pain. Okay, I always wanted to be able to play beautiful music. I've always wanted to be able to draw and paint. I had to keep looking for the box that God wanted me to tick, right? Because the things my flesh wanted to do, I didn't have a gift in that area. God did not see fit to give me a talent in that area. If He had given me the talent to play the guitar, I fear that instead of playing for Elevation Worship Team, I would have probably been playing for AC/DC or somebody. You see what I'm saying? God knows what He's doing. He gave you your gift, whatever it is, for a reason. Because the other thing, the thing that you actually want, that might kill you, man. Keep you out of heaven. You don't want that. So it's important to know what God gifted you with. And there's no hierarchy here, okay? If God gifted you to be a really great auto mechanic, now some people might look down at that until their car's broke and they're stranded somewhere. Now they treat you like royalty, huh? So whatever gift God gave you, maybe my friend Coney that I talked about yesterday, who recently died, by trade, he was a brick mason. That guy could lay a block wall like nobody you've ever seen before. And he didn't feel slighted by God. He did well for himself and for his family. And then built the kind of dream home that we all want to live in himself with his own hands from the ground up. How cool is that? Okay, moving on. So you can't draw a straight line. I feel your pain. You can't carry a tune, right? Keep losing the keys to the piano. Okay. Now, in that scripture, clothes for glory and for beauty that calls for creativity. Remember, this whole discussion, day 4 here, is about being creative. God wants us to be creative. He created us in his own image, and then he said, go forth and multiply, or create. Okay? Stop separating the spiritual from the secular all the time. Sometimes you got to. That's where you use Holy Spirit discernment. Okay? Colossians 3:17 says, whatsoever you do in word or deed, do it all in the name of the Lord. And my grandmother, she had a 2nd grade education, but she was one of the smartest women I ever knew. Besides my wife, of course. And she was one of the most faithful congregants at our little church in Thompson, Georgia, the Thompson Church of God. We had about 50 members. I seen her fast 40 days for different people that she was believing God to do a miracle. She was a very spiritual woman. Not one to rub it in your face, not at all, no. The only book she ever read was the Bible. Her job at the church, and she had a beautiful voice too. So I don't know what the politics was there, but her job at the church was to come on Saturday night and clean the bathrooms so that it would be all spick and span for the high-profile members of the church and community. And at first it bugged me, but then I watched her work. Humming, singing, praying in tongues sometimes while she scrubbed the toilet. Never once did I hear her feel that she wasn't treated fairly or slighted. Anytime I ever brought it up, she said, Wayne. Now, doggone it, she knew my name was Dwayne, but she would always go, Wayne. Wayne, I'm just serving God. It's not about the people. I don't care what they think about me, but I care what they think about this bathroom. Because my job is to make sure it's clean. And when we leave here tonight, son, it's going to be clean. And boy, was it. There's some late nights, late Saturday nights at that church. Okay. Now, whatever you do in word or deed, do it all in the name of the Lord. Colossians 3:17. See, again, I'm afraid if God had given me the gift of playing a guitar, I might have ended up playing for the wrong team, right? Not Elevation Worship, but some other, might have been a punk rocker, I don't know. So, how do you become creative? If the Creator created us in his own image and then said, go forth and multiply, that's a command to go create, dude. But I don't feel creative. How do we create? All right. Number 1, by acknowledging that God made you to be creative. Number 2, by asking him to reveal your areas of talent and creativity. And number 3, by valuing creative ideas. No matter what you currently do or how well you do it, a creative idea will enable you to do it even better. Creativity is being able to see what everybody else has seen and think what nobody else has thought, so that you can do what nobody else has done. Sometimes creative thinking lies along the lines of invention. We've all heard necessity is the mother of invention. I think that's a Frank Zappa album, but think about it. When you break new ground, creative thinking is needed. Invention calls for creativity. Other times it moves along the lines of innovation, which helps you to do old things in a new way. But either way, it's seeing the world through sufficiently new eyes so that new solutions appear. In Genesis 2:2, on the 7th day, God ended his work. Notice that creativity involves work, which is why many people tend to avoid it. It's just what I said earlier about trading. You know, some passport holders just trade the alerts, make some money, not worrying about tomorrow. Be wise like the ant. Use the alerts to learn how to find this opportunity in the market yourself, so that you don't ever have to worry that me or anybody else is going to get up and tell you when to get in and tell you when to get out. Don't you want to know for yourself? Of course you do. Now, there's so many parallels between life and trading, okay? And the longer you're a trader, the more you'll start to be amazed by all the parallels. Creativity involves work. Learning to trade involves work. Serving God involves work. Making the world a better place involves work. Building God's kingdom. Being a believer is not for the lazy. Okay? And that's why many people tend to avoid becoming a committed believer. The whole atheist thing, that's just a game. They know there's a divine creator. They just don't want to have to work for him. Wow. That hurt. But if you're willing to work at being creative, God will use you to do great things. I don't know about you, but I really would like to leave this world a little better place than I found it. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.